Welcome, and thank you for joining today's webinar. Today we will be taking a look at where the U.S. stands in terms of economic recovery. We will also be providing a tale of two recoveries with a special look at consumer spending and industrial production. Leading today's economic update is Danielle Marceau, Senior Economist here at Prevedere. Danielle, we look forward to your insights. Thank you for joining us.
Yes, thanks. So we want to focus today on taking a look at how far the U.S. economy has recovered since the bottom of this economic recession, at the peak of this health pandemic. Then we're also going to take a look at how different sectors of the economy are recovering at different paces. So the two that we're going to be focusing on today is we'll take a look at retail trade and industrial production and start to explore some of the differences in their recoveries, as well as how we expect those to shape up going forward. Just setting the stage with where we are in the midst of the health crisis. So over the last week, we have actually seen a turn here in the number of new COVID-19 cases. So we were seeing a steady and continuous decline in cases here in the United States. However, over the last 7 days, we've actually started to see that increase, actually a little bit more than 7 days, but our 7-day moving average there in the bottom chart is actually starting to head higher. So we've really seen the decline stall out, starting to potentially see early development of a third wave happening here. Definitely early to tell and determine if that's going to be a resurgence in the number of new cases, but we've definitely seen the declining trend stalling out. What that means is that's likely to draw out even further what we already see as a very, very long economic recovery. So however this new little bounce pans out, we are likely to not see some of the consumers want to return to everyday norm anywhere in the near future. So we definitely see those continued challenges into 2021. We know that the overall economy is well below where it was at the end of last year or even the first couple months of 2020. And we know that there's really going to be a long road to recovery ahead. And as I mentioned before, we're going to really look at this in detail, especially how different sectors, particularly the industrial side of the U.S. economy and the retail side, are going to vary as we go through this economic recovery. So let's first set the stage with where we are when it comes to how far the economy has come from the peak of this shutdown that was happening here in the United States. So as we know, gross domestic product, or GDP, is the best measure of overall economic output of any economy. It is a pretty delayed economic data, so we don't get it on a super timely basis, as well as it's only quarterly. But we do have a couple estimates out there at a more granular frequency, so that what you're looking at now is a monthly estimate produced by IHS Market Insights on GDP and where GDP is expected to be at, broken out on a monthly level. When looking at this historically, it does a pretty good job of mapping to what quarterly GDP, formal GDP numbers are. So it's a pretty good estimate about economic activity on a more granular monthly basis. And what I want you to first look at here is just getting an idea of how far we fell in this early stages of this recession. So the top chart is showing on a monthly basis what the percentage change in GDP was, or this monthly GDP estimate from February 2020. We're using February of this year as sort of the baseline, the pre-pandemic level, where overall economic activity was as of February is kind of our threshold to return there in order to reach a full economic recovery. As you can see, at the depth of this contraction, we saw activity fall 15.2% in April. And we've slowly been seeing some recovery going forward. So the most recent data point we have here is through July. We can see that even through July, activity was still over 4% below where it was in February 2020. If we're looking at the bottom chart here, just to give us a little bit of perspective of growth versus the same month of the prior year, we can see that through July, we were seeing down about 3% from the same month of last year. So we still have a ways to go. So what is this economic recovery going to look like? So if you look at the recovery on this top chart, the line is moving higher, which means we are moving through some recovery. But when you look at the June to July, the slope of that line has kind of flattened a little bit. The slope of the recovery really is slowing down a little bit. General consensus amongst most economic forecasters right now is that this recovery is going to look kind of like a Nike swoosh. And as you can see, we are starting to see that. We saw a really big contraction, a couple months of relatively robust recovery. And then generally, we are expecting to see this continue to level off and be slower and slower and slower. A little bit more drawn out. Think about the drawn out tail of that Nike swoosh. So we do expect it to be a really long road to recovery. Here at Private Area, we do not expect to see the economy to fully recover from all of the economic output that was lost in 2020, even by the end of 2021. So we do expect there to still be some major headwinds and this recovery to continue to slow. Median estimates amongst most major forecasting firms agree with that. It's not really expected that output in 2021 is going to fully regain everything that was lost here in 2020. So we do expect this to be long and drawn out. Most of the robustness, the quick snap bounce back, is likely to have already happened in some of the numbers that are here in front of you. That's from an overall economic output, kind of what we're seeing, where we are at today, and what the recovery looks like, and the shape we expect it to take going forward. But now I want to talk a little bit about consumer spending. And when I'm talking about consumer spending, I want to talk even a little bit more specifically about retail and food services. So what you're looking at now is overall total retail and food services sales in the United States. We have data through August of this year. The orange line, this is a monthly basis. So this is year over year. So this is the percent change in dollars being spent on retail and food services versus the same month of the prior year. If you then can look at the gray line, this smooths it out a little bit. Here at Private Area, we like to look at things on what we call a 3-period moving year over year. It smooths out a little bit of the month-to-month volatility. So we're actually looking at retail sales over the last 3 months versus the same 3 months of the prior year. Still a growth rate. We're still looking at how sales this year in 2020 are performing versus 2019. What's interesting here is that we did see a pretty quick snapback in overall retail sales. We actually saw levels of spending above last year throughout the summer months. So you actually saw some positive gains versus last year. A really quick, robust recovery here. However, the majority of this spending, or a good portion of this spending, was really bolstered by the stimulus, the $1,200 individual payments, cash payments to individuals, as well as the enhanced unemployment benefits. That really helped to bolster overall retail spending through the summer months. As I talked last week on our update, we saw a really big increase in the amount of dollars that consumers had in their pocket to spend. Some of that, the extended unemployment benefits at least, so that came to a close at the end of July. However, there was some left in August. There was a little bit of a delay in paying out some of that. So there was some additional enhanced unemployment benefits being paid out in August. What I think is really important to note here is that we are starting to see with the August data some potential early signs of a softening. So we did see a really quick bounce back. Most of the stimulus was focused at spurring consumer spending, and it did a pretty good job, as you can see. But early data really is suggesting that we're going to start to see a secondary pullback. So retail and the recovery here in retail, while we may have seen an early full recovery bolstered by government intervention, there is most likely a high probability of seeing sort of a double dip recession here in this industry as we start to see government intervention wane, as the post-stimulus, post-enhanced benefits, post-PPP, small business loan, as those start to work their way out of the economy, we're going to have this realization of the true economic recession that's going to be felt, because we are seeing unemployment remaining elevated. There are a higher number of people now that do not have jobs and do not have an income than last year. So while this was a very robust, quick recovery bolstered by a lot of government intervention here, we are starting to see early signs of a slowdown again here in the retail industry. So we do expect to see some secondary softness take hold as we enter into the final quarter of this year. The other thing to note within retail, while consumer spending overall, when you're looking at it from a retail perspective, when you're looking at it as a whole, it has been pretty optimistic. We do know that the spending has been very different. Consumers really did shift their spending habits. They're spending on different things, different places, and in different ways than they were pre-pandemic. So the recoveries, even the micro recoveries within the retail industry, is going to look very different as well. I mean, think about, there was a lot of one-time expenses that people were investing in as they shift towards sort of the new normal of living. Things like investing in outdoor furniture or improvements to their outdoor living space this summer, or even improvements to their indoor living space as they are spending more and more of their free and leisure time at home. Other things such as investing in furniture and desks, things like that, for shifting towards the home office and work from home, remote work mentality, investing in things to get their home ready for that, or perhaps remote education for their children, learning spaces. So we saw some really interesting dynamics in the different ways that consumers were spending. But we also think that there was a lot of one-time expenses as these people are adjusting to what the new norm is. So definitely some different dynamics there. We do know that, yes, retail trade, looking at it as a whole, has quote unquote fully recovered, as in return to pre-pandemic levels. But we do see some major headwinds for a little bit of this secondary softness to hit this industry as we go through the remainder of the overall economic recovery. On the flip side of things, we've got the industrial side of the economy. What you're looking at here now, this is industrial production. Industrial production is really a broad gauge of how the industrial sectors of the U.S. economy are performing. It encompasses mining, manufacturing, and utilities. Looking specifically at the orange line here, you can see data through August that industrial production was down 7.8% versus last year. So we're still seeing a long road to recovery here in industrial activity. Looking at that on that rolling 3 months versus the same 3 months of the prior year, we're down about 8.6%. So still lagging in how quickly this is heading up the road to recovery here. So the industrial side of the economy, thinking manufacturing, mining, utilities, it's a slower moving, bigger machine. So it is a little bit harder to turn back on, thinking about manufacturing facilities that might have to shut down or halt production. It takes a little bit more time to get things running and back online. So that's understandable. A little bit harder to start it back up once you've turned it off. But we still expect that we're not going to see a super quick rebound to pre-pandemic levels as we saw with the retail side of things. So we do expect this to be a longer, slower, more drawn out recovery. We definitely do not see industrial production returning to pre-pandemic levels until post-2021. Just looking at the different sectors of the economy, or the industrial production index, you've got mining being the biggest drag, down 17.9%. Manufacturing itself is down about 7%. This is versus last year. Utilities is virtually flat. So we know there is low energy prices going on right now. Oil prices are around that $40 a barrel. That's definitely putting downward pressure on mining activity here in the United States. $40 is minimally above the price needed for existing wells here in the United States to operate. You know, that's between $30 and $38 a barrel. It's well below where prices need to be in order to drive new demand for new wells. So we don't really see that, as long as energy prices staying there, any sort of really robust recovery in the mining side of things. Manufacturing, it is recovering a little bit. We are starting to see activity increase month to month. It's still well below where it was last year. And even looking ahead, taking a look at some of new demand for U.S. manufacturers. If you actually look at manufacturers' new orders, so that's actually orders that have come through the manufacturing door. So orders to these manufacturers for products that they produce, it's still down 6.2% versus last year. Been a mild bounce back, but the rate of increase there, even in new orders, is slowing. So even that manufacturing side, still expected to be pretty slow, and not nearly as robust of a recovery as you're seeing in the retail side. So overall, retail and consumer spending is performing better than the industrial sectors within the U.S. economy. A lot of that was bolstered by the enhanced unemployment benefits, the one-off stimulus cash payments that were received. We do expect headwinds to prevail here during the final quarter of this year as that economic recession is kind of realized by the U.S. consumer whenever they don't have that additional income from government intervention. So more likely sort of a double dip expectation within the retail side of things, while industrial just continues along its slow road to recovery. And as, again, kind of reiterating from an overall GDP economic output, we do expect recovery to continue, but it will continue to also decelerate in the rate of recovery, sort of this long, elongated recovery without a full-fledged economic recovery until at least 2022. So that's sort of giving you an outlook of what we see, how we see this economy and economic recovery shaping up. And hopefully that's going to provide you guys some value in the future.
Thanks, Danielle. It's clear from our weekly economic updates that we are in a time of unprecedented uncertainty and volatility. As businesses head into the 2021 planning cycle, I want to take a minute to remind everybody about Previdary's economic scenario planning solution. The insights from scenario modeling can improve strategic, financial, and operational plans for 2021 and beyond. You can learn more about the solution by visiting the web address on your screen. And that concludes today's webinar. Should you have any questions for Danielle, you can contact me at the contact information on the screen. Thank you and have a great day.